Joining us for further analysis on what's playing itself out on that market scene is Rob Towell from Sasfin Wealth. Rob, always a pleasure and a good afternoon to you.
Thanks very much.
All right, Rob, it looks like a bit of a mixed one, I think, both here at home and in Europe. Let's talk about what is driving market participants this afternoon.
Well, we've got very thin volumes on our market at the moment. We've only got to about just short of 6 billion. And of that 6 billion, Sibanye is 1.4 billion of it. So Sibanye is trading at about 23% down at the moment after issuing a convertible bond. And the market doesn't really seem to be liking that convertible bond. It's a very large bond issue. It's about 20% of their market cap. And they're pricing it on the day, which is very surprising. So they're going to be pricing it at 30 to 35% premium of the VWAP, or the average price of today. So it looks like the bondholders that are going to take that up are selling Sibanye down at this point and trying to get as low price as they can for that convertible bond. So that's really driving our market, which was pushing us negative. If you took that away from the market, really good retail moves today in the market, with all the clothing retailers up and all of the food retailers up. And on the banking side, FirstRand came out with an update as well, and they up 1.2%. So the banks are quite firm, but really driven by Sibanye and the platinums, which are driving us down today.
And I must ask you about those platinums. They're often down, Rob, just what we're seeing happening with commodities around the world. But today it looks like really steep, falls. Implats are down more than 7%, Amplats down more than 6%, Northam also down more than 5%. Is there anything that has happened, particularly in the macros or in news, that has driven them down to this level today?
Not really, besides Sibanye coming to the market for money. People are expecting that platinum could be at a lower level for slightly longer, and they're not seeing this uptick in demand for platinum into the ICE cars, which is the combustion cars. And people are waiting for the hydrogen economy to get going, and that's still got quite a lot of development. So I think that Sibanye's bond issuance is suggesting that the other platinum miners might also come to the market looking for cash while they build this hydrogen economy. And you start seeing that weakness come through in the platinum shares.
Sorry for that, Rob. I want us to get into some company results in a bit. But first, I'd like us to just quickly go to the US. Microsoft OpenAI, what happened there, Rob? It happened over a weekend. Things that happen over the weekend are seldom good things.
Well, it just shows you the competition in that sector, in the AI sector. So Microsoft bought ChatGPT earlier last year. And now there's been a shakeup at OpenAI, which is the company that did ChatGPT. And they've thrown out their original founder and CEO. And then Microsoft have taken him on board. So, and they own it. So it's quite surprising. So it just shows you that there's a huge demand for those skill sets in the AI side. And you're going to start to see board movements around for the people that really do have that skill set are going to be sought after. And you see in here Microsoft taking that CEO from OpenAI.
Very interesting times in that AI space. Let's take a look now at our local company news, starting with Telcom. That share up 8.9% today. Markets seem to be very pleased with this set of numbers. Let's talk about it because, of course, Telcom has had a very difficult last few reporting periods, but it looks like the sun is shining on them again.
So 2 announcements from them. Obviously, their earnings announcement came out, but then also that they have got a buyer for their masts and towers division. And, if they do sell the towers and their masts, it really frees up a lot of free cash flow for them and takes a lot of capex out of a very stretched balance sheet. So problem with Telcom that it's had a lot of debt over the last few years. And if they can manage to sell those towers, it relieves a lot of that continued capex that they need to keep those towers going. So it was the first positive thing. Then on the actual earnings themselves, we saw quite a nice turnaround across all of their different divisions, including OpenServe, which is the fiber operator, and that showed really good growth and good numbers and good free cash flow. So they had a lot of headcount reductions in OpenServe, and you're starting to see that fiber business start to produce revenues as well. So 2 really good things. Their revenues are picking up, their costs are coming down, and they've got a buyer by the looks of things for their tower and mast business. And that will really free up a lot of free capital for Telkom, which will allow them to compete at a better level against MTN and Vodacom.
Also, we're looking at Coronation. Of course, I think it might be useful to look at Coronation without the effects of this tax issue that they're facing, Rob, because it looks like markets have priced that in, and now we're just waiting for an outcome for them. So I'm keen to get your thoughts on how the company has fared there.
Yeah, so I see that they reinstated their dividend, so they're going to be paying a dividend again after they've got taken some provisions for a possible tax payment that they'll need to make. That tax announcement could take years still. So, they've made a provision for it. So if you take that out and start to look at their numbers were about flat, but earnings per share still relatively firm. It's trading on a PE if you take below 10%. And they're paying a decent dividend as well. So I think at these levels, it's quite a decent stock to have in your portfolio because you're going to be getting a good dividend. It's got good cash flows, and even though they could have a tax payment that comes out, there could be a settlement there. It could be much less. So I think that the market is priced that in now, and I think it's at fair value Coronation at the moment.
And then let's talk on Southern Sun. They saw profits falling 24.2%. I'm keen to get your thoughts here because, of course, we have seen their competitors actually doing slightly better than them. And I'm wondering if it could also be a market positioning issue for them.
I think overall the numbers weren't bad. Obviously, if you take the 22 numbers out of it because there was still COVID and some restrictions, their numbers were far better on a year-on-year basis. But overall, I think, they've had a lot of restructuring in Southern Sun, but their occupancy levels are relatively firm, and they've had a few good events. They had the Netball World Cup in Cape Town, and you can see those numbers from over that period were really solid. And then also they hosted a lot of the BRICS delegates when the BRICS Summit came into South Africa, and a lot of their hotels were full there. So they've had a really good few months, and even though their numbers are slightly down, their forward-looking statement is quite firm, saying that October and November have been relatively good. And you're also seeing that local tourism is starting to pick up. I think foreign tourism is getting very expensive. Flights are very expensive at this stage. And you're starting to see that flow back into regional travel. So I think they're in a decent position. Not the best numbers they could have had, but I think looking forward, they're well positioned.
Well, Rob, I'm keen to get your stock pick in a bit, but first I'd like us to reflect on some counters that have found favor with the industry peers.
Tonight I'm going to go for Visa. It's actually had a bit of a decent run through the course of this month, but it has been one of those solid performers. If a stock like this is kind of positioned very close to, call it all-time highs, in a very tough economic environment, I think that you're definitely probably going to see some further new highs made in a stock like this. It's a good quality business. Fundamentally, it's not on a demanding valuation. Looking forward, I think there's probably going to be some leverage to earnings as we get a better interest rate environment and consumer spend starts to pick up. So it's really just calling this top of the interest rate cycle, consumer spending potentially picking up in a more friendly economic environment. So tonight, stock pick is Visa.
It's the iShare 20-year Treasury bond ETF. Admittedly, been a little bit early on this one, but if you assume that global interest rates have peaked or are in the process of peaking, then it's likely we're going to see a significant rally in US bonds. I think even if those yields continue to move a bit higher from here, I think the asymmetric payoff profile of getting in now is compelling, and I think almost regardless of if next year is a risk on or a risk off type environment, I think the total return profile of an investment like this stands investors in good stead along with an equity allocation. So that's one we're recommending, and we think now is probably close to the right time.
I'm going to go a little bit more blue chip and go first rand. We do like the banks. It's our preferred way of playing the SA Inc. story in South Africa. First Rand's got a dividend yield of about 6%. It trades on a PE of 10 times. So the banking sector has generally been very well managed, and First Rand's always been top of the pops as far as management goes. So I'm going to stick with that one on this.
All right, Rob, keen to get your thoughts on some of those. Visa, First Rand, but also the iShare 20-year Treasury bond ETF.
Yeah, so, First Rand's one of our top picks as well, and I like First Rand, so I agree with that wholeheartedly. Visa, very strong business. They've got a monopoly with MasterCard on the payment side. And even though there's new upcoming payment providers. Visa and MasterCard are still very, very strong businesses, and we like both of those businesses. So Visa, I think you can hold as a blue chip stock in your portfolio for many years, and you can easily add it, even though it is not at its cheapest levels ever at this point. And then on Treasury bond ETFs, everybody's expecting interest rates to come down, and if they do come down next year, those bonds are definitely going to pick up in value. The question is, will they come down, those interest rates, and when will the first cut be? So you could be a little bit early on the Treasury side, but I think long term, even locally, our bonds are delivering you a really good return at the moment. You can get about nearly 12% on South African bonds, and if we do get a cut in rates, you'll see the bond prices lift up. So all of those are relatively good calls, and I would definitely have the blue chips in my portfolio.
And which counter are you going with this afternoon, Rob?
Well, I was going to go with FirstRand, but now that it's already chosen, I'm going to go offshore. I think utilities offshore with the interest rates coming down next year is a place to look at. I like Next Era Energy. They're like similar to an Eskom, but on the eastern seaboard, and they do wind power, gas power, and solar power. So they're alternative a version of a Eskom, and as interest rates start to come down, their costs come down, and they've been beaten up this year, and I think it's a really good entry price. So that's a Next Era Energy.
Well, Rob, it's always a pleasure hearing from you. Thank you so much for your time this afternoon. That was your midday markets update with Robert Towell from Sasfin Wealth.